Okay, guys, so in this video, I'm going to break down how I was able to get an entry for this one to 8 restore reward trade. Now, I'm going to break down how I did that, but before then, as you can see, this is the trade over here. So, this is actually a trade I took on my accounts and also my competition and personal accounts. Now, this trade is on Nasdaq. Now, basically, there are ways that I take my trades. There are two types of trade that I take. So there's the one I call the structural, right? Then I also have the reversal trade. Now, reversal trades are trades I normally take from I'll take at the edge of a market structure. Now, what I mean by that is, let's say for example, we have a market structure, right? This is a lower high, and then this is a low. Now, the trades that movement, all right, or the reversal into or the retracement into the discounts, into the premium zone for this market to sell again, the trade and take at this point, which is the edge of this structure, is what I call the reversal trade. Now, the structural trades are the ones that I take from, the golden zone or the supply zone in case of a sell, right? In case of a bearish structure, is what I call the structural trade. So this is actually a reversal trade. Now, how did I catch that trade? Now, the model I use for reversal trade is the ICT concepts, all right, the silver bullet ICT concept or silver bullet strategy from ICT concept. So basically, what I look out for, right, is that during Q zones, as a London Q zone or New York's Q zone or Asian Q zone, depending on which particular session you trade. Now, for London Q zone, which is normally between 2 a.m. to 5 a.m., uh, 2 a.m., right? 2 a.m. to 5 a.m. This is New York time, not Nigerian time. So pay attention to that. So this is when you normally see price sweep liquidity, then go the opposite direction. Now, what will normally happen is that you are going to get, let's say, for example, previous day low somewhere around this area, right? Previous day. So let's say this is 2 a.m. New York time. This is 5 a.m. 5 a.m. New York time. Now, let's say the market is trending downwards and we had a previous day low or 4-hour fair value gap, whether it's an internal or external liquidity around this area, right? What price normally do around this 2 a.m. to 5 a.m. is that it will come down, all right? It will come down, take out that liquidity, then it will now do what? Create a change of character and retrace. Now, it's not always going to take out this high, but this retracement over here might be a retracement into a market structure, maybe a 1-hour market structure, 15-minute market structure, or a 4-hour market structure, depending on structure you're looking at. So this move over here is what I look out for when I want to take a reversal trade. So number one is that it must be happening within the Q zone. Now, if you take a look at this trade, right? Take a look at this trade that I took over here. Let's see. Now, this is the 1-hour time frame, right? Now, this liquidity over here is actually from the Asian session, right? Now, if you also look to the extreme left over here, we have a fair value gap. So this is also an internal liquidity, which price came for during this Q zone. As you can see over here, we have this is 2 a.m. right? This is New York time. As you can see, -5 over here. So this is 2 a.m. and this over here, this is 5 a.m. So this happened within that time frame. Now, if you go down to the 1 minute time frame for you to actually see the setup, you can see this is 2 a.m. and this is 5 a.m. New York time. What did price do? Right? Price went down to do what? Take out that fair value gap and also sweep the liquidity from Asian session and went up and gave a change of character. right, and started going upwards. So this is how I caught this particular trade. Now you can use it. You can use this strategy, New York session, Asian session. It doesn't really matter, but you just need to know what your Q zones are. All right. So this is how I caught this trade. Already taking partial. As you can see, my stop loss is just at this point. Now my target. The reason why I'm targeting so much risk to reward. The good thing about this strategy is that you can use it to target the very supply of that market structure. Let me show you what I'm talking about now. On the 1 hour time frame, using smart money, right? Remember I told you that I take both structural and reversal. Now, the structural trade or the level I should be expecting the structural trade right now should be at this point, right? Which is the actual supply zone for this market structure. As you can see, we have a breakout structure, right? So this is a supply zone. So the reason I'm targeting that level is that this level over here is a high from yesterday's New York session, which most likely, most likely the market will need to go up, right, to take it out, tap into this zone, then start coming down. So this is just how I um, combine both the structural trade and also the reversal trade. So, guys, if you love this breakdown and if you're also using this strategy as well in your trade, let me know in the comment section. All right, take care, guys.